Ladies and gentlemen of the crypto space, we're live on Monday, January 8th at 11:48 a.m. So, as much as we will always answer every comment, as much as we'll look over the charts for Bitcoin, Ethereum, and the stuff that I have on my watch list, we do provide the macro perspective. So, we will be looking at oil. We are going to keep in mind the employment situation. This is obviously just U.S. specific in this conversation, but certainly around the world is very significant. The structure of the system is always changing, and the system doesn't look so healthy. What does that mean for us as individuals? The system has forced individuals to become investors, for better or for worse, and this has always been the case in many regards throughout the last 100 and something years in the 1900s. There's always been the lure, the allure of owning productive assets, of trading, and that type of interaction with these kinds of exchangeable liquid assets that can be bought and sold. But maybe more so now than ever. Not maybe, it's kind of more so now than ever that the market has forced us to engage in this behavior. Now, I know this from a personal standpoint. I've been an Android developer for going on, what, 15 years? 16 years. Jesus. Has Android been around that long? iOS and Android? Life goes by so quick. So at the top of the pay scale, once you get into your 40s, what are you going to do? Okay, how are you going to achieve what you're looking to achieve? And not everyone is an entrepreneur where they borrow capital and start some sort of restaurant or retail operation. And Lord knows real estate doesn't work since '08. It just doesn't. The whole concept of leveraging home after home after home and building a tremendous debt position, that's not something I ever thought interesting. But I did have capital from working, employment, my education allowed me to achieve this career. And that capital, I wanted to own things. And it started with securities, stocks, equities. And I realized there was limitations to doing the things I wanted to do, to owning the things that I wanted to own. And I find myself in this crypto space with absolutely fascinating things over the last couple of years. And over the last couple of years, I see investments, I see businesses, and that's maybe more recent than what we experienced in 17, 18, 19, 20. And 21, it seemed quite interesting to start to describe the space in terms of companies and businesses. And why not? Why not? And I argue strongly that this is the rebirth of actual investments that carry meaningful dividends, that have the capacity for principal appreciation while servicing or offering significant cash flow potential. And that's the mentality that I bring to this space. And it's certainly no longer, if we fast forward to today, I don't make trades. I either own or I don't own. Everything I do is to carefully construct and fine tune the portfolio into something that I see as it's not code, it's not as sophisticated as code, it's not art like a sculpture, it's not as sophisticated as that kind of construction, but it certainly is a construction. A portfolio has a form, it has characteristics. Each asset has different properties and attributes, and sentiment in the market and price certainly isn't the core expression of what's most meaningful about an asset. It takes a lot to invalidate owning something just because of price action, especially in the market conditions of the last 2 years. But the most important characteristic is cash flow, XYZ. How much does it cost? How much is it paying? And how likely is it to continue to pay? And I think that that is just the best thing for the core of a portfolio. Why? Isn't that what everyone really wants? That's why everyone gets a job. That's why everyone gets up and goes to work. They go to work for a salary, buy a salary, purchase it, own a business. Except the business is a pain in the ass with a retail presence. And it turns out the financial system has grown so large that there's the concept of financial businesses. And the financial business doesn't need a retail presence. And in crypto markets, these financial businesses are pure software, have no people, have no human resources, have no OpEx, have no DevOps infrastructure. That's all paid for by the properties of the underlying blockchain and the security model, the consensus model. Bitcoin pays it with a subsidy, and of late it pays it with fees, which is very interesting that that change has finally occurred. And that's clearly the case with Ethereum mainnet, its L2s, the excitement on Solana, albeit the subsidy there is relatively large, so that's a hot topic. And obviously with Sei and Celestia of late, which is literally just a Cosmos hub, a chain on the Cosmos network of networks, which means if they do well, everything in the Cosmos ecosystem will do well because everything is liquid with everything. I mean, literally, that's the core tenet of Cosmos hubs. IBC. Everything is cross-chain seamlessly, which is quite remarkable to finally see Cosmos catch a bid. That was a very boring experience, 2020, 2021, certainly 22 and 23. And all of a sudden, it has attention. So, investing versus trading. Now, I don't have the answers for many small actors that want to accumulate meaningful capital. So investing, you probably want a fair amount of capital. How do you get a fair amount of capital is always the root of everyone's journey to get to where they want to get to. XYZ doesn't work with $100. XYZ works with $25,000. It works with $50,000. And I encounter this with some parts of my family when they're talking about investments, and they always go to real estate. And I'm like, what's the damn ROI? Sure, the ROI is 4.5%. And as you amortize and deduct accordingly, what, you get to 6, 7, 8%? But where's the principal appreciation? And you have to take on debt literally to get into your first property, unless you have, $500,000 sitting around. And then 4.5%. Oh, my goodness, the amount of work that's required for that return, you might as well buy a damn 10, 20, 30-year treasuries. And you're locking in 4.5%, 5%, or whatever the hell you end up buying is paying for a long time. The whole damn concept of consumer price inflation comes into the conversation, making everything all that much more complicated to digest. And all of that complexity forces someone that doesn't have experience to do very risky things. These risk with hat, that entire with hat shit on Solana is the same shit that we experienced in 2020 mainnet. And a lot of that has not yet occurred on Cosmos, which is interesting. That could spur a lot of volume on the FX markets, the exchanges, the AMMs. That's pretty interesting. I think that is a good way to relatively understand where things are heading, because everything kind of goes through the same cycle. People are like, oh shit, I could stake it and receive an interest rate. And that's like, it's leverage. That's credit. And every network ultimately goes through this realization where the people interacting with the network are like, oh, I could do credit. And they call it all these fancy terms, all these buzzwords like staking and LSDs. And that's why I love to peer through the bullshit and tell everyone that that is credit. Credit is credit. That's all it is. It's the same thing over and over again. Now, sure, you could rotate with the hot ball of money and follow the social media narrative, the stories, the hype and excitement where shit goes 10x on the money. Look at what Tia and Celestia are doing, and that's hot. That's interesting. That is a way for the few to turn $10,000 into $100,000. Do you think the majority are turning $10,000 into $100,000 and stopping there, even if they do? Oh, dare we bring on the leverage on a permissionless DYDX? Oh my God, or even just mainnet gearbox for you could do nowadays, or just doing it manually via Aave on pick any of the networks that Aave's on. You can manually long and short as well. Where does it stop? Where does the behavior become rational? Where does the behavior become sustainable to do what you originally wanted to do? That's why I do what I do. That's why I tell these stories, and that's why it's important to understand you're not wrong in wanting to turn 10 grand into 100 grand, but it's not likely to happen. The few do it. So you need at least the story. You need at least the methodology and the rationale to know where you want to end up, how to engage with markets sustainably, because as we started the stream, you are forced to engage with these markets because at the top of the pay scale of very high-end technology industries, you're not going to get to where you want to get to. And it's not even get to where you want to get to. You're not even going to get to where people in the past got to. My salary is that of a lawyer in the 1980s and 90s. You know what it was, 6 figures in the 1980s? I grew up in the 1980s. I was a teenager in the 90s. 6 figures. Holy shit. So, you could yell and argue and complain about consumer price inflation till you're blue in the face. It's not what people think it is. Blame the government, blame the Fed, blame the debt. If they stop paying, if they stop grabbing debt, your grandparents and the Social Security would be a problem. If they didn't stabilize financial markets, old people, not even old people, because that's the really Social Security territory, but the 40, 50, 60, 70-year-olds, they'd have a problem with their 401ks, and they'd have a problem, and it'd be social unrest and social instability and angry people. The whole job of government is to finance social civility. And the only way they know how. And the current mechanism is Keynesian economics, where they smooth the business cycle. I guess the point of this micro story is stop being angry and stop blaming. And you could understand that, senators and congressmen trading on inside information is kind of fucked up. What do you think they do on Wall Street? It's kind of fucked up. All right, cool. It's kind of fucked up. You understand that. Is that going to guide your behavior, your choices, your actions? Well, in some regards, it should force you to invest. To invest in what? And that's why we're here. That's why we talk the way we talk about what we talk about. because these assets are interesting. All right, let's start with a little bit of macro. I don't want to bore you too much, but oil down at 70 and gas down at 201 a little bit earlier. It's very interesting. System looks like it's on the verge of trying, and this verge could take years. That's the whole point. You have to understand where things are likely heading and look at the directionality. Not even a rolling top, but certainly a lower high. Oh, maybe we're going to rebound into an inflationary environment, and credit and the general public's going to have excess capital, and they're going to keep on buying and keep on consuming. The reason this oil is down is because the Saudis dropped prices. It's because they fear that people are slowing their purchasing and their activity. It's important to understand the oil market, to understand the crypto market, because oil impacts dollars. And you have to understand dollars relative to other currencies to understand the crypto market. And believe me, I'm pretty sure you folks are here because you want to understand the crypto market. So you have to understand these two things. And you kind of need to understand the bond market too. Holy fucking shit. You want to find bottoms, you want to find tops, but you're going to drive yourself nuts trying to find bottoms and tops on a weekly basis. So you want to find bottoms and tops on a more cyclical basis. The secular trend is clear as day. Secular being the consumption of this technology will continue. More and more people will want to try and play with it and stake their shit because it's interesting. Because someone said you could get 30% on your money, and then you could rehypothecate it and borrow against it and throw your staked LSDs and on some credit platform. I mean, you could put STETH on Aave. I'm just saying that everything I say there is literally STETH on Aave. Digest it, understand it. You got an LSD which is giving you interest and you're borrowing against it, so that creates more currency in the system. The same thing that occurs in these crypto markets is the same thing that occurs in the larger financial system. You understand one, you understand both. So in response to cheaper gas and oil prices, the world needs less dollars. That takes the power or the upward appreciation out of the dollar. When you see the dollar start to depreciate, the next thing you're looking for is the bond market to stabilize. When the bond market stabilizes, you'll see the move indicator come down. When the dollar comes down and the move indicator stabilizes, that's forward-looking indicator of a significant increase in global liquidity. Greater global liquidity means there's more synthetic dollars in circulation. More synthetic dollars in circulation increases the odds that people have access to money to do things. If people are more likely to have access to money to do things, there's a greater chance of money flowing into the investments that you like. It's as simple as that. That's the expansion and contraction. That's the bull market and the bear market that people talk about. It's all about, in many regards, GDP, but that gets complicated. But if you're growing or contracting, you do different things. And right now, things look like they will expand in the coming months. Now, they talk about a significant deflation or a significant contraction. And that's like a credit event because that whole expansion is credit. When the dollar comes down and the move indicator comes down, that has the capacity for credit to allow the amount of currency in circulation to expand. A credit event is where that expansion is interrupted, where all of a sudden someone's not lending, or the banks aren't lending to one another, which is exactly what happened in 2008. And that gets everyone afraid, because if you can't borrow, how do you pay your bills? If your credit card stops working, how do you pay your bills? That's obviously the case for a good part of this population in this country, unfortunately, but that is what it is. If you don't have access to credit, people get scared. Everything, everything you're doing in this market reduces to a confidence game. That's it. And if you have an absence of credit, confidence wanes. People get fearful and the market rolls over. So, ETF backdrop, access to more capital. Capital inflow from equities land. And the backdrop is very big because Bitcoin is basically $0, relatively speaking, to the global footprint. So the potential for capital inflow is very great. This is a market that's very interesting because the macroeconomic landscape is very scary. The real economy is suffering significantly. People are broke, their credit is tapped out, and they're frustrated. The consumer price inflation has stretched work income to its limits, which forces everyone to invest. Or at the margins, if you are struggling with your real income from employment, how do you get income? Most people don't resort to illegal activities, so they resort to speculation and gambling. That's why the gambling stocks in Vegas is doing probably very well. So this happens to be a place that is popular of late. Coinbase is very accessible. Gemini is very accessible. The potential for Bitcoin to run here is very high. And that is disturbingly correlated to the horrible state of the real economy. This is the place to be. Bitcoin went to 43. It's back at 45. Look at these. This chart is crazy. It's a lovely chart. But, and now we come to like a crypto conversation of my experience over the last years. And also my investment ideology. I don't see Bitcoin as an investment because if Bitcoin rips to 100,000, which is not far from here, really, in crypto terms, and you sell it, you have $55,000 worth of profit, and if you have to pay 30+% tax, $55,000 gain, take out 30%, let's say $15,000, $20,000. You're left with $35,000 worth of profit. What the hell are you going to do with that now? That's not to diminish the significance of that profit. The question is, now you have $35,000 worth of profit, your original $45,000 investment. What do you do now? You have to have a plan. You have to know the plan prior to engaging with that trading behavior. And that plan is not easy. Professionals struggle with that plan. I don't like that activity. I don't find it sustainable. I don't like trading. And it's important to stick to your methodology and stick to what you understand. Now, what does that mean with regard to making the most money possible? I don't think that's the goal that most people want. Because if most people that make a lot of money, you see the lotto winners and you see a lot of sports players, they blow through their money because they didn't have a sustainable way to manage their money. In the end, peering through the bullshit, most people want a sustainable way to manage their money. Or that really should be the goal. And that is owning things, and that is investing, not trading. So that comes back to our imagery, which is very nice for today, is just the old devils and angels on your shoulder type of imagery. Devil says, make more money. Get that 10x. Sure, 10x allows you to have some more meaningful investment capital. That 10x is not only not guaranteed, that 10x is extremely unlikely. Look at that dude that had like 12 mil worth of bonk. Now it's worth shit. Holy crap. That's crazy. I mean, listen, it's one thing if you have investments that have depreciated 80%. It's another thing if you had a bullshit meme coin that has completely collapsed your total net worth. You don't have a methodology, something that's sustainable to fall back on. Right now, that person's scrambling. Like, what do I do? I just lost all this money, and he really never had the money because it was unrealized gains. And if you sell it, there was probably a shitload of trading that went on in between, and questionable, liability situation he's probably considering right now. And then you find yourself frantic. So you want to avoid the frantic. And that's what we do here, is we have that sustainable methodology where we're calm, cool, and collected. Well, curve's at 53 cents and everyone's complaining that it doesn't pump. It doesn't do the 10Xs. But it sure as hell produces 25, 30% on the money. Even convex is cranking out 30% of the money. So that reduces that equation very simply to getting the best price possible, the cheapest price possible. And then you have to question Z. What is the likely for that revenue to continue into the future? And you sure as hell don't want your X to go trend towards zero, so it needs to be sustainable. And unfortunately, look at Aura. This thing looks like shit. Not gonna lie, not only does the chart look like shit, the price point looks like shit. Needs a catalyst, and I don't see that catalyst. Based on experience, the catalyst to stem depreciation of this type of instrument, this type of protocol, is recyclers, is a growing network of protocols that are consuming and selling products and services based on what this system offers. And I don't see that occurring, unfortunately. That's disappointing. We do see that for the Curve Federation. There are at least one or two other protocols coming online. I'm pretty sure there's a couple more, but Prisma has been doing very interesting. It has been behaving very interestingly, and that bolsters convex, and convex, it's all related. The amount of inventory and governance voting power that convex has is extraordinary, and it's been getting nailed as well back down to 302. But structurally, it's a higher low. Certainly doesn't appear to be producing the lower low like Aura. So it does have more of that support from other industry participants. So this is the comparison of something that has more support, what it produces in the price action, as compared to something that has less support. Now, how do you mentally process the depreciation or the lack of appreciation as compared to some shit like this that goes absolutely vertical? It's not comparable. It's a different phenomena. The way you engage is you make your multiples here and you buy investments. So what are investments? All right, you could do validation. I wouldn't be validating on, say, at these price points. You just capitalize. If you got a 10x on your money, that's wild. Grab a 10x and then validate on something core, something that has much more sustainable economics, maybe in Ethereum. And fortunately, nowadays, you don't even need to validate directly. You have your liquid staking products. So that literally changes the equation for rotation of capital gains into literally just an ST-ETH or an R-ETH. And all of the potential complexities and FUDs and argument that can be made against these protocols. I mean, look at the backdrop of the equities market. The risk in the real economy and the equities market is in the real economy. This is not the real economy. This is the financial economy. And this is global. This operates under different rules, different economic pressures, different scale and scope. So that's the greatest place for capital is really Bitcoin and Ethereum. And so many folks are disappointed, disenchanted with the Ethereum narrative because other stuff is cheaper. You're going to drive yourself nuts with the other stuff is cheaper shit. Great cash products, Bitcoin and Ethereum. Anyway, this was a lot of rambling on a topic that we discuss a lot, but I had an itch to describe start to finish and where I'm at mentally right now. And this is pretty comfortable situation if you zoom out and look at what is more or less a pretty decent distribution accumulation. Whether someone wants to go far enough and say like a Wyckoff accumulation is aside from the point. This is a heck of an accumulation with higher lows. Higher low, higher low. And this is obviously diverged in many regards to the upside because of a heck of a backdrop. Bitcoin appreciates. Everything else is going to appreciate very nicely. And you don't have to own the thing that appreciates the most. The goal is not to just appreciate. I explained to you, if it goes to 100 grand and you liquidate, there's a lot of complexity involved with managing that capital. It's not such a sustainable way to engage with the market. So you might want to sacrifice some of that appreciation for a more sustainable way to engage with the market. And in any case, that's the net goal. You just want cash flow to replace your damn job because a job is not going to get you anywhere anymore. You think doctors don't work their ass off? I literally work their ass off. I don't think that's what everyone wants. And that's why few are doctors. And lawyers, I don't know what the hell's going to happen with AI. You could do so much with AI nowadays. I think lawyers the whole industry is going to change in the coming years very meaningfully when an AI could be loaded with 100% of court history, all precedents, all of it. You could literally load the Harvard Law Libraries into an LLM, and holy crap, that's a crazy thought to say the least. 18 people in the stream, 8 likes. I appreciate all of you. Athletic Concept, good morning. I have the best intro photos. How you do that? Mid-Journey and playing around with it. Does the trick. Killis, good morning. Tapsy, Asarco. I know it's a topic I talk about a lot, but as you can see with the market activity and what we see on social media, it's still a very relevant topic. And I could probably just continue to discuss the topic and fold all the intraday market activity into the larger thesis, and it will serve many people well, hopefully. Stacks is very interesting. Significant price appreciation. There's a lot going on the Stacks ecosystem, which is a Bitcoin smart contract network. I would hope to see Bitcoin secured EVM networks, which is the stream I did earlier, catch more of a bid. But it seems to be the Bitcoin community likes their stacks, and Alex has BRC20s. But what are BRC20s? Bullshit meme shit. They're nothing. So sure, you could capitalize on the volatility, the PVP price action, experience those capital gains. And then what do you do with the capital? Have a plan, define a plan, and rotate to investments. And that works just fine, whether you're doing it on a Bitcoin secured smart contract network or what have you. Ethereum, Cosmos, Solana, not really Polkadot, but that's coming at some point. Price action looks very interesting. This is a very constructive price action chart that looks in the same position as everything else. Dare I throw a horizontal line on here? Something like that. Look at Ethereum, horizontal line. Look at that horizontal line. They all look the same. All the charts look the same. Even Solana looks the same. It's just further along. Even Solana. Accumulation, breakout. They all look the same. Now, protocols are going to look different. Bear in mind when you're talking about Solana, Polkadot, and the respective Cosmos Hub tokens, you're looking at gas tokens. You're looking at shit to execute transactions. So you got to realize how dumb that sounds. It's the whole point of the token. It's a gas token. That's crazy. But that's some shit that everyone's buying, and they're like, oh, this is a great investment. No, it's not an investment. It's a gas token. It literally blows my mind the dumbness, the degree of dumbness that I'm so bullish on a gas token. It's crazy. It really is. Raoul's in the house. A pleasure. Asun, Nomanad. Good morning. If your main allocation is with Curve, how do you offset smart contract risk? There has been no smart contract risk, and it's not main. What is main? What is a healthy portfolio composition? Something like 30% of the portfolio is allocated to that, and since 2023 appreciation, really Q4 2022, everything started to finally come back up. The rest of the portfolio carried with regard to the overall principal pricing, the overall valuation of the portfolio. And that's exactly as expected. I did not expect Curve to appreciate. In fact, Curve continued to depreciate with the debt complexity and the lack of liquidity complexity on mainnet. That was expected. I've said it till I'm blue in the face that I don't expect significant appreciation for the CRV asset. If it goes 2, 3, 4x on the money and gets back to, if it gets back to all-time highs, that's my expectation, and that is a clearly underperformance relative to the other price appreciation insanity. But that takes a hell of a rigorous narrative, a story to explain why that's the expectation and why that's reasonable compared to something going 20x on the money. I don't want to do the work. I don't want to do the trading. In short, that is the best way to explain it to somebody. And that has significant accounting implications and tax management implications when you're working on income rather than capital gains and active trading. Diego, pleasure. Patrick, I found what you said to be very true as my goal. Place small, high-risk bets to get capital to invest in large, low-risk bets with cash flows. Cash flows will not outperform, but it changes lives because I'm tired of working as much as I do. And in the end, everyone wants freedom, freedom of choice. If you feel locked down in a job because you cannot quit, you probably took on too much debt, one. But two, it's because you need the income. Okay, work to buy the income. That seems pretty simple. And that is something I realized, not too long ago, a couple of years ago, 2, 3 years ago maybe. I was always interested in dividend investing, but the concept now is crystal clear. Either you work for income or you buy an income. Tell that in your next stories to folks. Buy an income. That usually blows people's minds. And you want that to be simple and not have work. Like fucking real estate where you have to maintain shit and stop by and do repairs and manage insurance. It's a lot of work, especially if you want a certain degree of income, and that's usually like 3, 4, 5, 10 properties. It's a lot of work. Hey Dan, a pleasure. What do you make of DeFi made here thread on Curve issues today? Yeah, I mean, it's the same story. There is always complexity, and it's a relatively low liquidity situation, which is quite fascinating considering the emissions. Michael owns significantly less control, and there's equity, and he leverages that equity to have working capital. Working capital to do what? He's managing operations. He's incentivizing, and it's hard. And he's certainly doing it from a perspective with intelligence. Things would be not in a better position if he wasn't doing what he's doing. And I think there would be a lot of buyers in the same situation at 40 cents when he did OTC deals. I think there'd be a lot of buyers. In the end, for the reasons we talk about, folks would want a discount on cash flow. And that cash flow will be there because we see what's going on with convex vote rentals, vote market vote rentals, and Paladin's Warden vote rentals. There's a lot of vote rentals. Why? Because of the utility of the protocol. If you build a product, people will turn it, and it has a capacity to do something that a business needs, people will use it. And that's what the product has turned into. Whether that was what was originally intended when the protocol was created is another story. I remember when Andre came out with the first vote rentals platform. And look what it has become. Become an entire industry where hidden hand, that's the entire protocol. It's literally just renting governance votes. Quite remarkable. That's literally what Warden does, a Paladin product. Um, I mean, vote market as well is the evolution of what Andre originally wrote in code. Isn't pretty sure it's a business. It's quite interesting business to say the least. So you bet on an equity doing well in its business. You have all the complexities. It's balance sheet health and composition. It's debt load. And then you're looking at the business cycle, whether retail sales are still there or orders are still there if it's B2B, health of the economy and all those risks. What's the difference here? You have the same calculations with regard to risk and volatility. It's the same thing in many regards, other than the things that we highlight, that they're immutable contracts and they will exist no matter what into the future. There's no bankruptcy. There's no bailout. There's no intervention. There's no insolvency. There's no failure of the business that's been converted to volatility of price and extraordinary scenarios that very certainly may occur. But the business will always be there no matter what. And at some point, someone would want to buy the business. Someone would want to exert dominant control if they could. You know, someone in the industry that knows the industry has $100 million, they could twap it at 50 cents all day long and gain dominant control. So those are some interesting scenarios that come to mind. There is an inherent flaw in that regard because that would be a hostile takeover. And you could see that probably being of interest to persons that have capital in crypto markets, considering the network of networks, the businesses that are entirely dependent on this platform's functionality. Quite remarkable. So I find the business very palatable. And I appreciate that kind of inspection, but that inspection is still very specific and focused. It's not zoomed out enough. It doesn't consider the things we talk about, comparing these types of operations to equities and meat-based business, because there's risk there as well. And the inspection that he made unto itself is quite interesting because that's not a typical inspection you would make for some gas token or some network. He was literally inspecting debt outstanding. Actors that are leveraging the capital to acquire working capital to engage in business activity. And that's what it is. It's business activity. It's working capital, tapping equity. It's not leverage speculation and gambling. It's business operations. So that's fascinating unto itself. So peering through the story that he was trying to tell, it was a business story. That's interesting. Diego, what are your thoughts about PayPal stablecoin? I think Frax is going to finance the shit out of it because when PayPal sees, just like with any marketing operation and advertisement operation, you have indirect capacity to extrapolate ROI. So if you put up a billboard and it costs $100,000 and you extrapolate based on past experience that it will generate $120,000 worth of revenue, it's a little bit more quantitative in crypto markets. So if you could deploy $125,000 worth of vote rental incentives and receive $150,000, $200,000 worth of incentives ultimately, and that drives X amount of demand for the stablecoin, PayPal now has a capacity to quantify how much capital needs to be deployed to create X amount of demand, which translates to how much money do I need to turn this into a business. I'm very much looking forward to a lot of things playing out in 2024 with meat-based companies finally realizing the mechanisms of action to take in crypto markets to establish operations that are profitable and establish a footprint to either be profitable now or front run the capital flows to occur in the future. Why? Because there's opportunity. And that's the point of business, is to both take advantage of current opportunity and position oneself for potential future opportunity. Very interesting. To say the least, I'm quite interested in Frax Chain, and that's I think this is going to be a hell of a year, guys and gals. Marseilla. Hey, do you think FXS is a good coin to hold during 2024? So I got to break down hold during. So you set a time frame, and hold implies liquidation at some point. Maybe best to listen to the start of this stream a couple of times and start to expand on the methodology and the story that you could tell about how you manage money. Sorry to break apart and hit the the semantic structure of the comment, but I think that would be meaningful. Folks know my opinion of Frax. It has got to be the largest scale and scope goals of the entire crypto market from a financial product and service perspective. Very, very interesting. Listen, you're going to hold Frax at 780. It was at $9, and you're going to watch some shit go 10x on the money and be like, I made a bad investment. It's because you're inspecting the market looking for different things. Price appreciation and total portfolio value is not what you really want. What you want is a sustainable way to engage with the market. Look, I'm talking with you guys on this stream for about an hour. I'm not sitting here trading, trying to make money, trying to make as much as possible. No. But this week I made money, I made income, and I was able to service settlement. I was able to go to the grocery store and buy food. I was able to pay property tax. I was able to pay a note on my cars. And at the end of the year, I'm going to pay those fuckers off. That's another story. Because I have income, purchase income. So there's a good narrative for Frax to be an income producer? Does it fit XYZ? Not necessarily right now. It is moderately productive from a vote market standpoint. Frax does produce income. Where's my vote market? No, that's not vote market. I'm sorry. Oh, it is vote market. Frax comes from vote market. Oh, we got our balancer and bunny income. I see. That's very nice. That adds up. This is a couple weeks. Very small positions. But Frax does pay as well on vote market. I wish it was a little bit more, but it adds up. 12%, $24. What the fuck is that? You'll get 8% of the money on this one. There's some nice depth there. You could literally have a couple $100,000 worth of Frax, and this you could vote here, and you'll get $200-300, 8% of the money. Heck, it's still outperforming the damn risk-free rate of return. And volatility aside, it's one of my most favorite positions considering the potential. Speculating on the future is the whole point here. And when you see some shit going up 10x on the money, that's not speculating the future, that's gambling on the present. And it's literally just player versus player and hoping other people buy after you so you could capitalize. So I know it's a lot. It's a lot of psychology to try and put into words, but this is all a game of psychology and understanding it. Why do people do what they do? And unfortunately, we're entering a period in time when it's a lot of desperation. So buy income is probably one of the most interesting phrases to really understand, because that's freedom, because then you can make choices. MNAV, how are you? Captain, real estate offers 1031 tax-free exchange incentives for capital gains deferral. Does crypto offer this? Most certainly not. No 1031s are allowed. There's other interesting things. But you look, how slow is that? A 1031. That's great for rehabilitators and flippers. With an 8% interest rate, that really fucked over the entire industry, because that's all dependent on time. So that works and that's meaningful. So if you buy a property for 400, you sell it for 600, and you 1031 it, and you buy, well, what are you going to buy? Another beat down property for 400, and you could do it over and over and over again, and you have no capital gains due because you're 1031ing the whole thing. And that's the whole real estate game. You know how much work is involved with rehabilitating a property and managing contractors such that they actually execute reasonably? It's a full-time job. That's not passive income. I think about real estate a lot. My extended family loves that shit. And I'm like, no, that's not the work I want to do. It's a lot of work. And two, it contributes to housing inflation. Whatever. That's meaningful. But whether you do it or not, the housing inflation is there because of supply and demand. I think it's a crowded trade. That's probably the simplest thing for me to say. It's what everyone has always done, and the market will never go back to the way it was in 2000 to 2008. It's a different market now, and the opportunity just isn't there the same way it was. So we move forward. Now I'm 40. I'm one of the oldest millennials. And this is the market where it's going to be. This is the most interesting market there is. Hope that helps. 24 people, 13 likes. Smack that thumbs up button. I appreciate all of you. It's Monday. ETF this week? Maybe. That could be interesting. Looks like the Bitcoin beta is flying. Gas token on stacks. Look at that, 17%. Very interesting. This is when MeatSpace says past performance does not indicate future potential. 17%. Stacks. It's an incentive regime. It's literally the same thing as, you might as well be talking about FTM or any of them. Meta's doing well, 18%. I have a high opinion of Say and Tia. I will not buy these prices. Now, bear in mind, literally, you're talking about like 10 mil market cap. Because of my inspection of the networks, I'm like, I don't need exposure to it because I already have exposure to everything on Cosmos hubs, and they've had it for years. Atom and Osmo, I mean, literally, Osmo was an airdrop, and it's just been compounding since it was airdrop. And Atom, I've had it for since dollars, so that's just been compounding for years as well. Same for Polkadot. So I like seeing Say and Tia do what they're doing. Great, it's a network. It goes right through the IPC. If they do well, everything on the network's going to do insane numbers. So that's good to see. Still have a very high opinion of Stargate. Everyone's still looking forward to that layer zero drop. The potential is quite extraordinary. It's just underperforms, and it has underperformed for quite some time. Tried to break through the 50 SMA on the weekly, rejected twice of late, but it's obviously just been rejected. At some point, it breaks through. And then everyone's going to be like, all right, it's up 1, 2, 3, 4x on the money. Is that not reasonable? Is that not what everyone's going? All right. The rotation, the hot ball of money. The capital's going to go everywhere. It's going to go to whatever's hottest. And then it's going to appreciate, and then it's going to depreciate, and it's going to be a mean regression. And all that matters, when it appreciates and it depreciates, that you get fucking paid in the meantime. Because otherwise, you got to do a shitload of accounting, and that accounting on trading is not worth it at all. At all. Yeah, Nava, it's slow as all hell. I know folks that have done 20, they flip 20 homes in a year. You know how much work's involved in that? And it's so slow. Might as well trade stupid assets and get 10x on the money in a day. Not that this is reasonable expectations. I don't know about the liquidity depth and the capacity for cross-chain capital flow for the Stacks network. I haven't dug in that much because I would love a credit protocol, but it's just not there from what I see. It could be with this XD. I was looking into that, but I'm not gonna tempt you guys with that stuff yet until I know a little bit more. It's not even gonna have any utility on launch. Utility. Buzzword alert. Utility. Cash flow. Cash flow above all else. All right, if anyone has any questions, otherwise we'll wrap it up for today. I would love to see Matic catch more of a bid. Structurally, it has been lagging as well. Solana back up to 95. I don't think we see a breakout anytime soon. Maybe you gotta go down to at least the moving average. I mean, you're literally talking about a 50 SMA, 79.80, and this is really where I thought we were going to see, because this is a light moving average. You're talking about a 50 SMA on the daily. That'd be a nice target. Hit a 50 SMA, find a little bit of resistance on the 10 SMA and the TWAP, ping pong a little bit, and breakout. Is it inevitable? Probably. It's not what I would want. I want the beta on Solana. I don't want the 10x on Solana. It'd be nice to get the 100x if you're down at the bottom and you bought at $9.50. So you're sitting on 10x right now, and then it goes to $950 and you got the 100x. Right, you get 100x on capital gains, that changes the portfolio significantly. But you're not getting that. It goes to a 950 from here, you're sitting on a 10x. 10x, yeah, 1% to 10% changes everything. But that's not going to change it. You got to have a lot of risk on the table to put an entire $10,000 portfolio into one thing to turn it into 100 grand. $1,000 to $10,000 changes the composition of the portfolio, but that's not really going to meet the expectations of that are typical of a relatively small portfolio. $1,000 to $10,000 turns a $10,000 portfolio into a well, really, that doubles the portfolio. All right, that's pretty good. Set your expectations reasonably. That's the most important thing I could always express to you guys. Let's wrap it up for today. I appreciate your time on a Monday. 25 people made it to the end of the stream, 15 likes. Tell everyone to subscribe. Stay rational. If you experience capital gains, rotate to cash flow. That's the most sustainable way to engage with the market and will serve you well into the future. Enjoy your day. Link in the description to the most rational community in the entire crypto space. I appreciate everyone in there. I will see you guys later this week. Peace.